The broader implication is that the traditional roles of gold and treasuries in the global monetary system are reversing. Where treasuries once offered safety and liquidity, they now carry conditions. Where once gold offered no yield, it now offers freedom from political intervention.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. It's 8:01 on Tuesday. Put my eyes on. And this is the Gold Fix Market Rundown. Trying to get organized here a little bit. There's the home page. What will we be discussing today? Two things. Gold's pricing implies treasuries are junk. There is an analysis out by a Northern European bank, a Scandinavian bank, that makes comment pointedly that treasuries are trading like junk implicitly because of what gold is doing. Second, and more current events, we're going to talk about why silver got slammed last night, and it's presently clawing back, but it has been slammed. And those of you who were around for the silver squeeze in 2021, well, get ready for a little PTSD, because what happened last night was a mini version of what's happened in the past to silver when the market rallies. Okay, so before we get started, I want to mention that I had a very nice long conversation with Tom Luongo yesterday, and that discussion will be posted on his Gold, Goats, and Guns podcast today, tomorrow, in a day or two. There's also like an almost 45-minute conversation we had before then, which will be locked down for his premium Patreon people and for ours as well. And we talk about everything, hopefully it's interesting to you. It certainly was interesting and fun for us. Okay, so let's start with the markets. 10-year yields are 441, down 3. The dollar is 99.06, up 35. The S&P 500 is 59.27, down 11. The VIX is 18.52, up a little bit. Gold is 33.58, down 23. Not on its lows, but certainly not on its highs. Silver 34.29, down 45, clawing well off its lows, but obviously still down. Copper 474, down 6, down one and almost 1 1/3. Oil up 12, natural gas 343, down 5, Bitcoin down 500, platinum palladium mixed, equally mixed, gold silver stabilizing at 98 now, a little bit of correction there, and grains are all up. You can see that. Okay. Here we go. Two topics. The first topic is the analysis by a bank called SEB. I'm not going to do them an injustice by trying to pronounce their name, but SEB is a leading financial services group in Northern Europe, Scandinavian bank. They do a lot of grains. A lot of their client base is corporate and grains on the commodity side, and they're very energy oriented because of the grains. They published an interesting, if aggressive, comment on gold versus treasuries. Here's that analysis broken down with their original comments attached. Well, that's the story there. Sorry, I'm just quoting myself. Bottom line is the bank feels gold buyers at 32.89 are treating treasuries as junk, assets that are only worth holding if nominal yields rise north of 10.2%. Really aggressive. But certainly not a random way to coordinate gold versus bonds. There's the post itself we just sent out. The broader implication is that the traditional roles of gold and treasuries in the global monetary system are reversing. That's not new to you if you're a Gold Fix reader since 2022. However, it is new to see banks start talking about it this way. Where treasuries once offered safety and liquidity, they now carry conditions. Where once gold offered no yield, it now offers freedom from political intervention. Now that story continues there. We have the breakdown. We have our breakdown of their analysis, and we also have their original commentary at bottom. That's part of a a bigger report, a monthly commodity analysis. The only caveat, I mean, we agree with everything they're saying there. We can't say that 10.2% is the real nominal yield, that the nominal yield that has to uh, make gold stop rallying. Uh, but everything they say is pretty sound. The other comment is, again, for the Tom Luongo people, we're looking at another European bank telling you treasuries suck. Fortunately for us, they're saying gold is great, but another European bank is saying treasuries suck. Now, normally, recently, I would say this is, hype and propaganda going all the way back to the worst case scenario stuff for bonds. But there's a lot of indication that the world may not be selling as much treasuries as they would have you believe, but they're hedging dollar risk significantly. And so the dollar will be the sacrificial lamb to save treasuries going forward. That's been our opinion for a while, and it's starting to come to fruition now. Before we get into the silver thing this week, the end of the COMEX era, post-COVID world and how everything changed, and Bank of America says silver will go to $40 before gold to 4,000. All right, related posts, Goldman buy gold, not bonds, war escalation, Royals markets, and, well, you can see the other things there, but the thing, we didn't really post much yesterday, as you can see. I mean, it's 4 posts, but we didn't post too much. We've been spending a lot of time not in Twitter and on Substack's chat function. And you can see that right there, Goldfix Daily Chat. That one is unlocked. And in this chat, I would encourage you to click on it. It's unlocked. They're not always unlocked, but it's unlocked. And we had 118 replies yesterday. And while I didn't put as much continuous effort into it as I normally do, I threw a lot of insight into my position, why I'm doing what I'm doing. And the focus was heavily on silver, and there's some insights in there. So I think if you're at all interested in precious metals and you want more information, if you see that pop up on your feed, take a look at it. And frankly, that's why I'm not in Twitter as much as I used to be, because, well, it's a community piece, and I want to focus on that. Okay, data on deck, Tuesday, June 3rd. You can see it, a lot of Fed speakers. Why did silver get slammed? This is, the last night. Okay, just as a background, this is a chart, a weekly chart of silver going back forever. And in 2021, when the silver squeeze was aborted, it happened during European hours when JP Morgan downgraded the silver mining sector, and that caused silver prices, along with European miners, to slide from an 8-year high. Okay, so just put that in your copy paste mindset for a second. And now let's take a look at what happened last night. Okay. Last night, China's PMIs came out and they were very weak. That's recessionary, deflationary, and calls for more, let's call it, calls for more stimulus on their part. So you would think that if silver sold off, their stock market would sell off as well, because economic stuff, silver demand, but that didn't happen. Here's what did happen. During European hours, I'm going to put this chart up to give you some perspective. During European hours, silver it started during Asia, but during European hours, European mining stocks got destroyed. And those European mining stocks got destroyed ostensibly because China's PMI was weaker. What I'm saying here is, on weakness in Chinese economic data, the world mysteriously decided to sell European mining stocks and Shanghai futures, painting the tape in a very bad light. Now, the chart you're looking at there is an hourly chart for PIC. That's the Global Select Metals and Mining Producers Fund. Remember what happened in 2021. Silver has a 4% rally during US hours, and PMI comes in a little weak in China, and European miners get destroyed. And silver comes in 2% lower at one point. So let's go through the markets that were affected by this PMI. Here's an hourly chart for this ETF. It closed at 37.15 after gapping higher yesterday. And now it's going to gap in down here. So global mining stocks got slammed last night. Let's go company by company. Here's Vail. Vail, hourly chart, gapped higher and finished strong. Today, it's called down 5%. Okay? Next, Rio. Rio's been open all night. This is Rio yesterday, Friday, Monday, gaps higher, and then works its way lower. It's hard to see on that chart, but you're going to have to trust me on this. BHP is a little bit easier to see. BHP, hourly chart, Monday, gaps higher, and then the data comes out, and miners take it on the chin. How does that happen? How is it that a soft PMI number decimates European miners while Shanghai is getting sold hard? Well, the answer is, I think, this is completely speculative. I think somebody got nervous again. And I think if you're looking to keep a lid on an exciting market or a market that's potentially about to get exciting, you would pull the European miner card out. A little bit of weak data comes out on China, and you hit those miners simultaneously. In Shanghai, if they don't buy it, you sell silver. Anyway, admittedly, this is aggressive on my part, but I have seen so many of these things before. If it works, they do it again and again and again. So the buying in silver was US hours yesterday, mostly. Okay, and that was because American CTAs are weak and covered their shorts. A little bit of China weakness, and opportunists sit on silver and gold as well, but silver. There's no reason for silver to be this low, given the data and the events that came out, especially in light of China stocks not being lower. That's the Hang Seng, but you get my point. Anyway, a little bit convoluted. What I'm saying is silver is a market that broke out significantly and could run now. If you're short and you want to cover shorts or you want to keep things calm, you do what happened yesterday. Yesterday meaning last night for American traders. Anyway, I mean that's what's going on, right? Whether you want to call it manipulation or just a market that's susceptible to influence, that's what's going on. All right. That's all for today. I'm Vince. Have a great day, everyone.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.